and Hers Health, NYSE HIMS, is trending sharply after the FDA announced it has referred the company's compounded GLP-1 weight loss products to the Department of Justice and pledged to take decisive enforcement action against non-approved, mass-marketed GLP-1 drugs. The news triggered a steep after-hours sell-off, reigniting intense debate across the investing community over regulatory risk versus long-term disruption potential. The FDA's action targets compounded versions of popular GLP-1 medications, which HIMS and Hers has offered as lower-cost alternatives amid ongoing shortages and soaring demand for branded weight loss drugs. Regulators signaled growing concern that some telehealth platforms may be marketing compounded products at scale in ways that resemble commercial drug distribution rather than individualized pharmacy compounding. Why the market is reacting? Regulatory overhang. A DOJ referral raises the stakes significantly, introducing potential fines, restrictions, or forced changes to product offerings. Revenue exposure. GLP-1 weight loss products are widely viewed as a key growth engine for HIMS and Hers, meaning any disruption could materially impact near-term revenue. Sector-wide implications. The FDA's language suggests that this is not isolated to HIMS, but could represent a broader crackdown on the telehealth compounding ecosystem. Bull case. Supporters argue that HIMS and Hers is meeting massive unmet demand for affordable weight loss solutions. The company has repeatedly adapted its product mix and could pivot toward approved oral GLP-1s, branded partnerships, or new therapeutic categories. Regulatory scrutiny validates how meaningful the company's impact has become. With a short float near 34.95%, any clarity or favorable resolution could fuel a violent short-covering rally. Bulls frame the sell-off as a classic headline panic rather than a thesis breaker. Bear case. Skeptics counter that compounded GLP-1 products may face structural elimination, not just temporary restrictions. Growth assumptions tied to weight loss could prove overstated. Valuation remains stretched relative to traditional healthcare peers. Ongoing regulatory uncertainty may keep institutional investors sidelined. Some bears view the situation as confirmation that HIMS's aggressive GLP-1 strategy was always vulnerable. Community sentiment. Across Reddit, X, and StockTwits, angry posts accuse regulators of protecting big pharma profits. Others blame management for pushing legal gray areas too far. Traders are dissecting support zones, gap levels, and options flow. Many are positioning for either a dead cat bounce or a high volatility short squeeze. The stock has become a polarizing battleground name between conviction longs, opportunistic dip buyers, and momentum shorts. What to watch next? Any formal DOJ communication or FDA follow-up actions, company response or changes to GLP-1 product offerings, signs of shifting focus toward menopause care, diagnostics, or oral GLP-1s, short interest updates, and unusual options activity. Bottom line, the FDA's referral introduces a serious new layer of risk for HIMS and Hers, but also intensifies the debate about whether the company is a reckless rule bender or a genuine disruptor in affordable digital healthcare. With nearly 35% of the float sold short, HIMS now sits at the intersection of regulatory headline risk and extreme technical pressure, a setup likely to produce continued volatility in both directions.
Okay, so the stock lost 17.5% in the post-market session of Friday, the 6th of February. Okay, 46 million shares across the tape. 50-day average is around 16 million. It was quite a big day for the stock. Short interest you've seen over there 30 something percent or thereabouts. Quite a high beta as well, 2.18, 2.184. That's how it amplifies the broader market in either direction. So this is its 4-hour chart. The stock has been showing a lot of weakness for some time now, perpetually printing lower prices. Let's see now. Lower prices expected to remain in place up till Monday the 9th pre-market session. Then after that, we are looking at the prospects of a consolidation up till Wednesday the 11th pre-market session of that day as well. Then after that, still lower prices. As things stand right now, based on this extrapolation, Short sellers are not worried. They're not really that worried, and it's not hard to borrow. Is it hard to borrow? Not really easy to borrow. So they are really having a field day on the stock. Yeah, they are. Let's see now. Projections are saying now 26.41. It's an upper projection. You can't rely on that at all. Can't wait for that to print. Momentum is expected to remain stable up till Monday, up till Tuesday the 10th, and then from that day as well is expected to pick up. What could possibly be happening then, when the extrapolation here is not saying that it's gonna bounce? Is it earnings are coming up on the 23rd of February? Even towards then, let's see, we don't have anything in that direction. Okay, let's see what we have on its daily chart. Underlying trend on the daily chart, I think, let's just say neutral, just neutral. Okay, so the stock has been showing a lot of weakness within a neutral trend. Before now, the algos didn't know about this news, so it was extrapolating a spike. Okay, so we can't read a lot of meaning into this, but at least we've seen it. We've seen what the chart looks like. So let's see what we have on its weekly chart, if there's anything there. Okay, it doesn't have any extrapolations. Okay, here we have 24.32, 17.33. We didn't get the extrapolations projections on the daily chart. Projections are saying 31.53, 32.89, 33.74. Really ambitious projections there. Okay, so coming back to the daily chart, let's see what we have as regards its price pressure momentum. So as regards its market grid, hoping that it actually worked. Yeah, it's outside of the grid. It hasn't reflected what's going on. So let's have a look at the 1 hour chart to see what is there. On the 1 hour chart, what do we have here? Okay, we have a range of prices. We have between 21.42 and 18.1. It is currently at 19.37. 19.37, yes. This with a downward trajectory. Yeah, this is where it is, S1. Yeah, it doesn't have any support. It has a support. It's not robust. So, but it's not that robust. Yeah, so there's a chance it might test 18.93. But around there's a decent amount of support: 18.93, 18.49, 18.1. So it might test it, but may get a bounce from there. Let's see what we have. Let's just be sure we don't have anything else. Yeah, it might test and maybe pick up some support around there, between 18.93 and 18.1. The prospects of deep into such losses there. But even here, the extrapolation seems to be suggesting that it might get a bounce. So could it be that this is what is behind this extrapolation of a bounce that is expected to kick in from Monday's pre-market session? Okay, we'll see how all of this will go. Okay, so on this 4 hour chart, it has in this daily chart, so 1 hour chart, it has this pivotal projection of 24.08. Do we have it here? 24.08. No, we don't have it. It's not in play at the moment. Not in play. Yeah, it's not in play. It was actually in play yesterday, but the algos have just stopped reiterating it. Okay, yeah, just see what you make of HIMS, and thank you very much for watching this video.